Wednesday, February 26th, market analysis, Stan Ehrlich. I always start out with stock market indexes, E-mini, NASDAQ, Dow, and go to the futures markets, interest rates, energies, metals, grains, meats, a few others. So let's get rolling. Now, you guys know that I've been talking about this market in the process of topping out somewhat for many weeks now. And it looks like it has started. That means that the high on February 19th has generated what I'm calling a double top, but this kind of looks like maybe a triple, but that's very rare. One way or the other, the lowest low between the highs, whether there's two or three that you use, is on the date of January 13th. You measure from that low price on January 13th to an average price to the highs, or you could use the highest high. Now, I tend to use the average. And you find the vertical height of that distance from that average to the lowest low. Then you take this measuring stick, so to speak, and you measure down from the lowest low the same distance, and I get a downside objective of 54.50 approximately. And that is my minimum downside objective. We need to break out, and that's closing below 58.10, a ways to go before that downside objective becomes viable. Meanwhile, we basically have a sideways trading range where the resistance level is at these highs, and it's stopped it now approximately 3 times. And the lows are a little bit wider in terms of the accuracy or narrowness of the price levels. And there, this little support zone at 58.50 to 58. Now, we got oversold yesterday on all across the board, all the indexes. That means that the market is very close, excuse me, to having a bounce, which may last a very short period of time, usually a day or two at a minimum, maybe a week or two, but a bounce. And depending upon how severe it got oversold and where it turned around, you could come up with a upside objective for the bounce. In this case, I don't know. I don't have one. It doesn't seem to be a great spot, except maybe around 60.54, but that's kind of vague. I think there's a chance that the bounce has already finished, and today's high is fading very quickly. This market is now almost at the low of the day, and low and last right now pretty much only up 1 point. And it was up, I don't know, about 3 or something like that, 71 to 23 earlier, a little bit above yesterday's high. Again, yesterday oversold, so it did bounce. Is it over? Maybe. All I can tell you is significant resistance has stopped the market and the indexes, almost all of them, about the same way as the E-mini has stopped. And now the 1 minute chart, we have actually made in the last minute or two a new low for this session. Yeah, it looks like we did, just by a little bit. But the fact is, it rolled over and now is making new lows. Let's look at the spider. Pretty much the same story. About to make new lows, more likely than not. Got oversold at a support area. And that little support area is a gap closure zone from the January 14th and 15th gap. So, gaps are almost always closed, as I've said many times, and that's true. I like to say that they're like a black hole in space that tend to get black hole in space. It tends to suck the price action back into the gap area to close the gap. trading in the same range where it did not trade before. And that was again between the dates of January 14 and 15. So that's a minimum downside, but that's too close. I think that's not going to hold. And breaking closing below 575 on the SPY is going to generate a downside objective of approximately 542 and a half, which is very close to a little support area. I'm going to leave that alone. So that is my expectation. Now, another comment here. This is now a trading range that is in the ballpark of 5 months in duration. Quite a significant amount of time. You've got essentially the beginning of November getting up into the price range, which I define as around 580 for the lows and around 610 for the highs. So you got November, December, January, February, and February's almost over. That's 4 months. In some cases, it's been more like 5 months. That's not to be ignored. A third to close to a half a year. We break out of this double top formation or triple top, whatever, to the downside. It's going to be a fairly significant break. I wasn't a month or two ago expecting this market to go sideways as long as it has. The more sideways movement, the bigger the formation, typically speaking, and the larger the move and the longer they last, usually. So this is developing something a little more significant than I was saying a few months ago. Now I can see the possibility, if not, maybe I should use the word probability, of it coming down maybe all the way into the October lows, although I doubt that. So I'm going to say coming down into summer. So that's still 4 months. March, April, May, June, July, 4 or 5 months. If the double top, triple top breaks out and starts to trend lower, right now, big sideways range, but I see it coming, I think. Now, looking at the spider 1 minute chart, you can see it's in the process of heading Tierra del Fuego, heading south. QQQ, basically the same story. Sideways trading range essentially from the early part of November. I know the lows are a little bit higher and the highs are a tiny bit higher, but for the most part, 90% probably more, the prices have been in this range. Double top, downside objective, maybe a few months from now, 460-ish for SPY. Now the QQQ, I'm sorry, that's the QQQ, my mistake. And the QQQ 1 minute chart shows us starting to break down somewhat, not like the E-mini, which has just made new lows for the day or for the sessions, more accurately said. It's not all daytime, it's nighttime a lot. So anyway, NASDAQ didn't even make a higher high today than yesterday. It's a doji and inside trading range, now back down to where it opened, and it may have made minor new lows here in the last few minutes. No, not quite. Came very, very close, and I do think it's going to. And the YM is a little bit different animal here. We have a bullish engulfing buy signal yesterday, official ER signal. Turned the price action green because you were oversold and you had a bullish engulfing. It's the opposite of the red bearish engulfing in overbought condition that worked out very nicely. This bullish engulfing did not work out all that well, but there were still profits to be taken. It lasted just a few days. I wish there was a more upside follow through, but there wasn't. Let's see what happens to this bullish one. Now, from a personal opinion standpoint, I don't think it's going to work. I think that we're going to break below that low of yesterday soon, maybe even today. And we're now already 170 lower on the YM. So it's already negative for the day. And the 1 minute chart shows we've a little while ago made new lows for the session the second time this morning. Once at around 6:30-ish California time, and currently. So it's breaking down. Now, you did get higher than yesterday's high, and if we get lower than yesterday's low, you will have not only another engulfing, which means if it stays lower on the close, it's normally construed as a bearish engulfing, and therefore we're going to see lower prices right away. And that kills the bullish signal from yesterday. So if we get below yesterday's low, no matter how we do it, that signal's bad. We did have a day trade loss yesterday because there was no significant upside follow through after we made the higher high. Nevertheless, it was an outside up day, an oversold condition, and it was a legitimate signal. Question mark as to whether they work. They don't always work. Sometimes they work unbelievably accurately, and sometimes they don't work at all. When they don't work, my stops are close. I don't take big losses. Golden rule: never, ever, ever, ever take a big loss. Don't let them get that way. Kills accounts. I was a broker for 35 years, stockbroker for a while, commodity broker 35, and many different positions, so to speak, in the industry over the 53 years that I've been doing this and watching the markets. Now, I don't have a lot of faith in this buy signal, but I've said that before and they work great. So the mechanical part of this would be long at this point, YM, and losing a little money. We'll see what happens. So now, Russell, totally different animal. Major historical resistance has stopped the market starting back in November when it hit the top of this wide resistance zone, got down into the support area, the red, bottomed out, came back up to resistance, topped out, a very noticeable, significant, fairly accurate around 2338 resistance level. And now, yesterday, we made new lows since September, when we did have a bullish engulfing that worked fabulously well, and another one a little bit earlier that worked very, very well. So now we're oversold in a support area, and the Russell may have a bottom coming soon. And I expect that in all the stock indexes, because they're oversold, for a very modest, minor, short-term bounce, then down. We got the 1 minute chart on the Russell, and it hasn't made new lows, holding up a little bit better than the others at the moment. Okay, what about bonds? Yay, bonds have made another new high. Yesterday, finally, they reached the minimum upside objective on the head and shoulder bottom that I outlined for you and detailed all the way along the line, day by day. Testing support, testing the neckline, breakout levels, shoulder levels, objective measurements, etc., etc. This pattern worked just fine. Minor variations on the textbook version, but that's to be expected. Rarely are these technical formations exactly the way you would read them or have them described in textbooks. I know I'm in 20 different technical analysis books. So we're overbought. Resistance level having touched yesterday and today. We're set for a minor downside correction. Objectives on the upside have been fulfilled. And if we have a move down to approximately 115 and it happens to bottom out or try to bottom out, get oversold, and start to turn back up for any damn reason in a 3-week period, about 3 weeks from now, then I'm going to be screaming bottom formation, but that's not happening yet. Overbought, yes. Downside correction expected, yes. But now I want timing and price to fall into place. And that would be around the middle of March, which is just next week. And that would mean about 2.5 weeks from now. And around the price of 115.5, maybe more accurately. So we'll see how that develops. But I am bullish intermediate to long term on interest rate futures. This is going to be a very wide year and a half, approximately, broad double bottom if we continue the longer term trend up, which is what I'm expecting. But, you know, we're overbought right now. So small correction right now. It all seems to be falling into place if it comes true the way I'm depicting it. 10-year notes, essentially the same story. 1.5-year broad double bottom formation at very close to the same exact prices and overbought condition. And I am expecting to see it to pull back down. Right now, it's pretty much high and last, and I could expect a little bit more strength, but I wouldn't be buying it. If I was long, I would be raising my stops tighter and tighter, under the market, of course, and looking for sell signals, which I don't quite have yet. But because we're overbought, I do expect it to roll over sell signal or no sell signal soon, maybe a little higher. What about crude oil and the others? New low coming down pretty good, very, very close at 2681 RSI to my oversold level of 25. Now, I know Wells Wilder usually or did use 70 and 30 for his overbought and oversold levels. Also, George Lane with stochastics. And I knew both gentlemen. George was an old friend of mine. Wells is a friend of mine, acquaintance at the seminar circuit. Stuff we used to see each other around the country and around the world occasionally at these big seminars in the late 70s, 80s, 90s, and later. So crude oil should have a little bit more downside, but we're getting so close to oversold, I expect to bounce at any time. Next, we've got heating oil. Same story. Almost oversold, almost at support. I do expect it to come down a little bit more, but we're probably close to a bounce. And the trend here in both crude oil is obviously long-term up since April of 23. We're looking at 2 years. And with the heating oil, at least I can say, using this particular chart, for the last 6 months plus, trend is up. So a little lower, maybe hitting the support level here at 2.2 and a half, 2.248, or a touch under. But then I think it's going to turn up. What about natural gas? Well, we're overbought within the last few days. Today's high is higher than yesterday's high. We are now significantly lower on the day and damn near below yesterday's low. Not quite. But if we do get below yesterday's low, I will then have a red bearish engulfing ER sell signal, much similar to maybe this one right here. It's not the highest high, but it should produce a move down. And that would be to probably 3.6 and maybe even a little bit lower than that. But there's no sell signal yet. All I've got is resistance and overbought conditions, and it's working, but I don't have that red ER signal. Next, we got gold. We did have a bearish engulfing signal, ER, on February 14th. It worked a little bit, but not that much. Then we came up and made a minor new high last few days and dropped like a rock yesterday. So today we're bouncing slightly. Is this rolling over and starting to turn down? I think so, but I have two upside objectives that haven't yet been fulfilled at 30.10 and another one at 31.15. Now, I'm looking at topping out type of activity, but I'm not expecting a bear market or a huge bear move. I'm expecting a short-term minor downside correction. Yeah, 28.54 looks appropriate, but it's too close. A better number was 27.80. That's probably going to be it. So I'm looking for a dip down to 27.80. Maybe it's going to take a week or two. A little less, maybe a little more. And then up again to make new highs for the trend. What do we got? Silver. Same kind of story, but it's already made new lows for several weeks and already probably pretty close to its downside objective where it'll turn back up again. Maybe we're going to get down to 30, but I'm thinking it's probably going to be a little higher than that. Okay, copper. Platinum first. Popped up, couldn't hold it, dropped all the way down to where it opened, and maybe even made a little bit of new lows since the opening, but I'm not sure. This is just a daily chart. Now, we get very, very close to oversold on platinum, but not quite. I'm looking for probably a move down into the support area and getting down to 957, 958, or a little under. For a long time now, many months, it has bottomed out in this major support area at 960 down to, well, 905. That's very wide, not super accurate. But there's a few places like 935 to 938, which is a pretty good resistance zone. I'll probably draw on a rectangle. Just a second. I'm actually going to draw. I can't do that yet. I'm not going to do the. Wait a minute. Okay, here we go. Yeah, I'm going to raise this up since we haven't reached it in the first place. Right. Yeah. Okay, I'm going to drop it there. So that looks very viable. 940-ish, maybe 960 to 940, and I can't rule out something lower. Next chart. We've got high grade copper. We got a sell signal on the top exactly, and on this high exactly. We have three buy signals that were very close to lows. That one's the lowest low. These two produced a nice rally, and this one was too early. This sell signal, so far so good. That rally this morning, probably it. We're already back down to the low of the day, maybe even making in its last hour or two new lows. I think it's going to break yesterday's lows and continue to head south again, maybe down to 415 to 411. Bearish on copper. Soybeans and grains in general. I'm looking for a long-term bottom, trying to justify it, and I have been able to do so very nicely, in particular corn. Soybean oil's done very well, but soybeans, although they had a good rally, didn't quite break into new high ground, emphasizing that this price level around 1098, give or take a penny or so, is a significant resistance area, and we stopped there. We pulled back to make modest, minor new lows for a month or so, not very fast, not very aggressively, and I think we're not going to come down too much more, maybe a little bit like 1025, and at the most I would be looking at 997. I doubt lower, but somewhere in that ballpark. I expect it to turn back up. I hope we get a little oversold condition applying at the same time. I am basically bullish on grains, but waiting for another signal or some proof that it's going to start trending up again. So looking for a bullish turn, expecting a little bit more of a dip. Can't be too much. Can't take too long to do it. Let's see what the market provides us with. Soybean oil has made new highs just a few days ago since, what was that? Yeah, the middle of November. It may have a head and shoulder bottom that's a little lopsided, built, and all we need to do now is basically head up toward this upward slanted neckline, in which case you're going to get a 62 upside objective. If you break the line and everything works as it could with these head and shoulder patterns, which are my favorite technical analysis pattern. They have a variety of features to them. There's lots of things to look for that are telling you that it's working correctly, and things to look for that tells you it's failing or never even broke out. This is not broken out yet. I need it to start heading north. We're close to support, not quite down to oversold. I can and have to allow a little bit more of a dip, maybe 44.60, maybe even as low as 43.20, but I kind of doubt that. So let's see if it turns up very soon, and then I'll be screaming bloody murder whether we're going to see a big move up in grains. What about meal, soybean meal? Well, it's also giving me some trouble, a little bit like beans, but a little worse. It almost made a whole new low yesterday for many months, over a year. It didn't. It stopped cold turkey at the bottom of the support level and bounced some, but it's only one day now after that low. I hope that low holds. I think it should. It was close to oversold, and we did make it a little bit above yesterday's high. I want to close above 306. Then, maybe in the same day, above 309. And a short term, intermediate term upside breakout would be great above 330, and I'm looking for that. Then we have a low back in approximately June of 23, a low in March of 24, and a low yesterday, February of 25. At least I think it's a low, but I meant to say, sorry, December of 24. Those are the three major lows. Triple bottom, major historical support area. You do have a bear trend line that looks quite legitimate so far. So it's a matter of support holding and starting to see new highs for multiple months, which we have not even started the rally yet. But I think it's coming soon. Next, corn did have a head and shoulder bottom, past tense, did break out to the upside, past tense, and has reached its minimum upside objective, past tense. Now what? Well, you got a resistance area that it came up to just a few days ago, basically stopped at or a little bit above it, and then got close to overbought, turned down, and I can expect to see a little bit more weakness, maybe 484 and 3/4. It might have hit a low yesterday. I really can't tell. We're not oversold. There's no reversals. It just came down a little bit too fast, a little too quick. Bouncing slightly today, currently down a couple ticks. I don't know. Maybe it's going to dribble down a little bit more. I'm trying to find, looking for things to say that I can justify that are going to be the market's turning up, it's turning bullish. I don't have them yet, but I think I'm going to find them soon, maybe in a few days, maybe a little bit lower. But I'm basically bullish, looking for a minor turning point coming up. Next, wheat. Same story. Coming back to support, topped out in overbought condition. Didn't quite get up to the resistance area, but that's okay. I still like this broad double bottom in wheat as a potential long-term bullish situation. That means we got to start closing above 650-ish, and then we'll have an upside objective of 750 or higher. We were there just last spring at those price levels, 750 up to 790. So I think it's going to do it again this summer. We got cattle starting to drop back a little. Maybe it's going to test this support area more accurately, more closely. I can't get bullish yet. Looked like something was starting yesterday, and that's about it. It didn't have any follow through today so far. So I'm going to have to back off on cattle at the moment. I'm not comfortable with a prediction. I think it could get a little weaker, and I do like the overall longer term trend, I'll say that, and I do expect it to bottom out relatively soon and not too much lower. Hogs did come into support yesterday, did come back down to oversold condition, almost super close. My oversold is 25 or under. This came down to 25.86, under 26, but not under 25. So It would have turned it yellow if it did. Super close. Now we're getting a bounce, so we got very close to oversold in a support area, right around where it's bottomed out 3 times before in January. Yep, January 8th, a little bit higher on January 22. And what is that? February 3rd. Okay. So yesterday could have been it. I got no indication at the time other than support area and getting super close to oversold. But there's a good chance that was the important low and it's turning up. I'm not ready to say definitively that that's correct at the moment, but it looks like that could be starting. And we got the one chart that I've been following for months and months, several months. This was a big surprise. The fact that it crashed a couple of days ago, big downside gap. Again, gaps are almost always closed. We got extremely oversold. And I said this yesterday, we are probably very close in time and price for it to turn up. We're now up a bit this morning, $2 on a $65 stock. It could have been it. Now, unfortunately, I'm not going to get a bullish engulfing here because we never got below yesterday's low. I might have a new high above yesterday's high and a close above yesterday's high, which we haven't done yet. So far, it's just a doji. But I don't always get a bullish or bearish engulfing at the turning points and or an ER signal. So I think it may have turned, but I'm not quite sure. Back to the mini. We're lower on the day, making new lows. Everything is slipping pretty good. Now, last comment about the mini, we got higher than yesterday's high. If we can get lower than yesterday's low, then we'll have an outside trading range or an engulfing. But at that point below yesterday's low, it's a bearish engulfing. Now that could be a profound type of trading range day, but it hasn't happened yet. So I know what to look for, which is important. But unless they happen, you just look for them. You don't do anything yet. So I'm watching to see if I get any buy signals. I don't want them yet, frankly. I want it to get a little bit more oversold. I want it to come down to the support area. Then I think it's a little more likely we're going to get a bounce. If we don't get any bounce, watch out. Major, significant, I would say significant, not necessarily major, double top formation and a big downside move. I'll be talking about in a lot more detail as we get closer and closer, if we do, to that breakout. You guys have a great day and profitable trading to you.